Morning all, how are we doing? Oh, hang on. I've put my chat window over the other side on a different monitor. That's confused me this morning. I was like, where is everybody? Morning, Stevie. Morning, Jarmond. Morning, Jane. Happy Black Friday Day. Day after Thanksgiving Day. Americans all waking up with Hangover Day. Right. Just watching the DAX. It's coming down fast. Watching the DAX this morning. Just about to get, just literally that second, just got into a short on the DAX. We're just taken out. This is on my on a funded account, by the way. This isn't me normal account. Just watching this high of yesterday, which they've just reached for pre-market. That amount of movement pre-market is quite dramatic. So look like they're reaching for a level, and I've got a feeling they may be reaching for liquidity to dump today. So I've just got a short position on. Ooh, that's selling off fast, isn't it? Which actually, because this is an evaluation account, I might as well go for yesterday's low. What's that? $1,300. So I first trade on this account, so I need to click the button. Yeah, so just watching that level on the DAX. I'm also watching this account, so I've switched over to this account this morning because I'm also running the opening range breakout EA that I was developing, which I covered on Wednesday. I've set it live today. I finished all the back testing on it yesterday, which is lovely having a day yesterday of the markets going nothing, doing nothing, going nowhere. Got some work done. So I've set that live on here today. So this is a brand new 50k evaluation account, which I've just set the EA on. I shouldn't have taken this trade because the whole idea of this account was actually to test the EA, see if the EA can pass the evaluation. Oh, I couldn't resist it though. It's a lovely looking opportunity for a double top rejection. So we'll see. Anyway, that's why I've only got in with 0.5% on this trade. Got in a little bit less keen. So 8 o'clock, the EA should start adding orders. I'll go over the testing that I've done on it yesterday with you in a bit. But yeah, so that's what I'm doing this morning. There's no ADRs today so far. Obviously, yesterday was Thanksgiving. DAX yesterday, it was a funny day on the DAX yesterday. They put in, basically at the open, they put in a super fast move and then didn't really do anything and then undid half of that move and then just pulled up. So basically yesterday, they literally, it's a typical holiday day. They basically did the move and that was it. You just didn't really get an opportunity to do anything. There was a nice short there, but apart from that, it was a bit of a mess. And obviously New York was, as you can see, dead, totally dead. US indices, dead. Asia, London, New York, dead. And S&P, dead. FTSE had a bit of movement in the London session, obviously, but obviously dead in Asia. And the Dow, same thing, just dead and flatlined. Oil, sideways. So, yesterday, because it was Thanksgiving, it was just a sideways day. So nothing actually moved really at all yesterday. A little bit of movement, but not a lot. So today we've got no news at all. It's Friday. There's nothing in the calendar whatsoever for today at all. So it's just a total dead day news-wise. We've got obviously the US waking up with now 2 days worth of order execution to do. So I'm expecting a very busy New York session this afternoon. I'm actually expecting a busy Globex session for the indices as well, because I think with the US indices today, they'll be keen to get some movement in during Globex, which is the Asia and London session before New York opens. But we will see. So it depends. I'm going to watch obviously the DAX this morning, but we'll see what happens. We might have a busy old day today. So So yeah, indices obviously yesterday completely sideways on the US. You see this tiny little day there yesterday. Didn't do anything. Just a little bit of algorithmic movement during the Globex session. But the DAX obviously had a bull day yesterday. So we had this range, which was kind of here. And obviously that low there since we had the push up on the US dollar weakness. And then we've been gradually, ever so gradually, sort of trying to push higher. Yesterday it broke out. So it's a difficult one from a fundamental perspective because we would be expecting this to come down. Now, where we are, we were expecting next leg down, but obviously we've had a very weak US dollar, which hasn't helped. And the Eurozone economy is actually not doing too badly. Morning, World King one top. World King and one top. Black Friday trading. So yeah, that's what I'm looking for today. Potentially, one of two things is going to happen with the DAX this morning. We're either going to come up and challenge that high. I mean, there's lots of wicks up here that we could make a run for, obviously. So those are the main key resistance levels ahead of us. That's an ADR today. So whether or not they can make it up there, if they're going to go long, I'm not sure whether or not they're going to make it to ADR, but they may do. So that's an ADR basically, is the next resistance to the upside. If we're just going to do liquidity run and drop, obviously this is now 9 days. Was it 9? 1, 2, 3, 4, 5, 6, 7, 8, 9. Yeah, 9 days sideways, and we've broken out. So obviously when you're in a range, most of the time when you find there is a range, the first range breakout fails. The first range breakout is price discovery. It's usually an attempt to go higher. The reason the range hasn't broken is because there's not been enough buyers, or there's been too much selling pressure to allow that range to break. So the first time it gets through, it usually takes such a lot of force to get through there, it fails because the buyers just run out of orders and we get that pullback. Whether or not that then turns into a reversal is all dependent on the buyers and the sellers, but the first breakout usually fails. So we've had the first breakout yesterday, which is why I'm anticipating a down day today. And the fact that they ran for that liquidity straight away first thing this morning before the market opened was like, come on guys, it's too obvious. Everybody went short on that yesterday, thinking that was the range breakout. Their liquidity's sitting there. It's too easy target. So that's hence why I've gone short this morning. Obviously the market's not open yet. Now it is. I've got the timings wrong on this one, on the Price Action Toolkit, but never mind. So we'll see what happens at the open, but it's going to be an interesting day on the indices. In general, I think it's going to be an interesting day because it was obviously so quiet across the board yesterday. Everything was fairly quiet yesterday. Bit of movement on some pairs. Pound specifically had a big day. A sort of big London session, obviously, but then nothing happened after that. Actually, it wasn't that big, was it? It's quite range bound. I was just watching. What was I watching? Yeah, it was pound Swiss. That's it. I was watching the pound flying on something, and I can't remember what it was. Pound Swiss. We'll have a look through all the FX pairs in a minute. But I just want to watch what happens at the open this morning. How's everybody doing? Getting ready to spend loads of money on Black Friday? I'm not. I'm always worried about buying stuff on Black Friday because it's most site places have got a 30-day return policy, haven't they, on stuff? And I'm always worried about buying Christmas presents because if the person wants to return it or exchange it or something, like you're buying stuff on the 25th of November. Christmas is the 25th of December. If they don't get onto it pretty much on Christmas Day, quite often you can't return stuff, can you? So I'm going to go and have a look around for things that have got extended returns periods. But today is the day to do your Christmas shopping. Fill your boots. Big sell-off that liquidity run. So Let's see if we can hold that this morning. Stevie, buy. We have to buy a sandwich toaster. Funny you should say that. I bought one last month. We were in. What was I doing? I was looking for an air fryer in Asda or Sainsbury's or wherever it was we were, and couldn't find an air fryer. And we both looked at the sandwich toasters and were like, "Oh, toasted cheese sandwiches!" So we bought one, literally just to have it for lunch. And then we realised why toasted cheese sandwiches or sandwich makers are so bad. It's because when you use them, they make the biggest mess in the world ever. It goes all over the countertop. It goes everywhere. It sticks. It's just a hideous thing, isn't it? Sandwich maker, sandwich toaster. I love them, but you need industrial cleaning products to actually clean up the aftermath. Okay, nice sell-off starting. So the opening range breakout EA, it's not running on here, it's running on my VPS. So basically what I did yesterday, let's open my VPS, was I set the EA up yesterday on the VPS here. So it's sitting on this VPS. So this is the funded account. I took one trade yesterday just to get a day in, basically, because it's 5 days to pass. So I just wanted to get a day in yesterday. I opened the account yesterday. Obviously, I took a trade and it went wrong. But anyway, so basically the ORB EA is running on here. So we should see this starting to place orders literally in 2 minutes. So I've got it running on the DAX, the NASDAQ, and the Dow, which I have tested. Obviously, it will only trade the DAX in the mornings, and it trades the NASDAQ and the Dow in the New York session. But I'll go through what I've done with the testing on it in a minute. I just want to make sure it actually triggers trades. This is where you find that you've cocked up and have done something stupid like not turned on auto trading, which I better check actually. Auto trading is turned on, smiley faces. I'll just minimize that because I might need to jump on it in a minute. Oh, and an MSTEA Trade Manager and Price Action Toolkit. Oh yes, yeah. Put those on your Black Friday list. Yeah, if you want to get it ends tonight. I have had it running for a week though. It's Black Friday today, and to be fair, I've had a Black Friday sale running for a week. So if you haven't filled your boots yet, and you don't do it by midnight tonight, don't come crying tomorrow. It always happens. It happened last year though. I ran a sale. I think I did a weekend last year. I think I did the Friday, the Saturday, and the Sunday. And I was inundated on Monday. Why has the price gone up? Well, it hasn't. It was a Black Friday sale. But I wanted to buy it. It's like, well, you didn't, did you? Not being funny, but if you can't make a purchase in 3 days, don't come crying on Monday. Or in this case, tomorrow. It's like walking into a shop and saying, on Black Friday, you had this on at half price. Today, it seems to be full price. Can I have it for half price? No. And there's nothing I can do about it because I can't do discounts on MQL5. They don't let you. Right, good sell-off so far. Okay, the EA has not triggered. Why is the EA not triggered? What's going on? Why are you not working? Oh, it has triggered. Oh, yeah. Sorry. There you go. Buy limit and a sell limit. What? What? Why is that triggered at the wrong... What the hell's going on there? Why is that triggered? That's not triggered at the opening range high or low, is it? Okay. I'm just going to cancel... Cancelling those off, for Christ's sake. Hello? Delete order? Thank you. Right, so that's not worked. What the hell's happened there? This is live testing, people. This is what happens when you live test a new EA. Why is it drawing the opening range high? There. And opening range low. There. What's the time on that candle? 10. Okay, fine. Well, that didn't work. Good job I'm in a short, isn't it, really? I just want to see what happens with the 10-minute opening ranges and where it draws those in. This is why you live test EAs on on demo accounts and not straight onto live accounts. I will do some analysis in a minute. Bear with me while I just do this. So what it should have done, yes, then was drawn opening range high and opening range low. And we should have got into a short here. And then we'll have an opening range low 2 drawn there in 1 minute 26. And then we will add to the position. But it obviously didn't draw the lines in at the right levels. I didn't do any live testing. I've only literally done back testing in the strategy tester, and it works absolutely perfectly in the strategy tester in visual mode. So I know it's working right in the strategy tester. I'm just thinking, why did it draw those in wrong? So it's obviously calculated the 5-minute opening range high and low at the wrong level on candle close, which would be because why? What was yesterday's levels? No, they're miles down there. That's not there. Oh, hang on. No. Need to work on that. I'm going to have to do some more live testing today. Right, so DAX finding some buyers down at the lows at the minute. So we'll see if if this is going to be a breakout today, or if we are just going to pull back and run for the hills, which is what I'm kind of anticipating, and I have been anticipating for the last 9 days, is a move to the downside. So right, so it's drawn the opening range low 2 incorrectly and opening range high 2 incorrectly. That's good. So opening range, so the opening range 1 high and low, for some reason it thought was there and there. Weird. That's 9, so that's a 10 o'clock candle. So at 10:05, find high and low. Something to do with the order that I'm triggering the events in, I reckon. So I'm just thinking out loud. Okay, so I'm looking. So that's a lovely little entry actually. So I'm going to add to this short if we break to the downside. If we break to the upside, I will. Actually, what I'll do is I'm just going to break even that position. So I can't lose. Basically, I got a no lose short. And if we break out to the upside on the first 5-minute candle, I'll go long. Well, I won't. The EA will. Right, I'll just let that play out. Let's make sure that none of these others have triggered, because these all work on different time frames. So the NAS basically and the Dow will be triggering at 2:30, whereas obviously the DAX triggers at 10 a.m., which is the Frankfurt Open for me. Right, Okay. So just before we go into analysis, there's no ADRs this morning so far. We've got some weeklies. It's Friday, so obviously the weeklies you could look at. Oh my god, new platform. Haven't arranged any of the windows. That goes there. I'm really organised this morning, aren't I? One sec. So yeah, so the ADRs this morning, there aren't any hits at all. Weeklies, we've got Aussie CAD, which is obviously this massive push up that we've had. So really extended on the Aussie CAD. The other ones we've got is New Zealand CAD, which I'm already in short on New Zealand CAD. I've got multiple shorts on New Zealand CAD on my other account, which is I've got 6 short on that at the moment. Positions just somewhere around here. So last one, so I'm too close to get into another position. So hopefully that's going to start to come down from there. And US dollar yen, huge move down on the Japanese bank holiday. It was like bang, big move down. And then they took full advantage yesterday, the yen. We had a really strong Asian session, and then we had a really strong London session. Pull back ever so slightly in New York. But all the yen pairs, they've had a good couple of days, good strong couple of days coming in on the yen, which is good to see because I am expecting the yen to power up. And it is starting. So I haven't got any shorts on at the moment, but this is what I've been waiting for, is to see some yen strength coming through, because I think that intervention that we've had is the start of the strength in the yen. And it seems to be underway. So I'm looking for shorts in it. But I want to see what I want to see with the yen is I want to see them actually do, get some market structure in, break some lows, pull back. That's when I'm looking to start some short positions. So we'll see what happens with those. So one sec. Sell stop. So we've got first candle, second candle, third candle. So this is just about to close. 10 o'clock, 10:05, 10:10. So this will now place the opening range 3 in 20 seconds. So I just want to see this actually do it. So it should draw in OR3 down there and OR3 high. There we go. Right, good, that works. Fine, so it's opening range 1, which has failed this morning. It's for some reason drawn it too narrow. Okay, so I'll let that run. So yeah, so there's your ADRs. There aren't any today. We've got 3 weeklies. So nothing to look at there. There's a few RSIs. I've got the RSI dashboards combined here. So I've got the RSI 14 for the hourly, and I've got the RSI 14 for the 4 hourly. So those 3 columns are RSI RH4. Those 3 columns are the hourlies. So I've just combined them on this platform basically. So we've got a few, but I'm going to run through all the pairs this morning anyway. So we'll have a look through everything in a bit. But just to cover the back testing that I did on the opening range breakout strategy. So this is a spreadsheet basically, which is all the back testing that I've done. So the conditions for the back test were for 1 year. So I've back tested April this year back to April 21, all done on open prices. The EA works on open prices only, because obviously we're taking opening range breakouts when a candle closes. So we're waiting for the range to be established and then we're taking a trade. So it's good because you can backtest quickly. So once the backtest results are in on that, I then take those backtests and then I put them on every tick to confirm those settings will work on a tick by tick basis, which is obviously normal trading. 2 pip spread on everything, which is actually 100% more than normal on the DAX and about 25-50% more than normal on the NAS and the Dow. So that should be worst case scenario. All on M5. DAX opening range is from 10 o'clock to 10:15, and it trades until 11:30. Dow is 430 to 445 and trades until 6. 100k balance, and then I took all the results from there, took the best results from there, and then I out of sample tested those results on a previous 3-year period, including the back tests for the year which I established the results on. So took those results which were favorable, tested them back again over 4 years to make sure that this wasn't a fluke, and those were the results that I've gone with. So with the DAX, you can see I tested 6,150 variations of the EA. So the EA settings, basically, there's lots of settings in the EA, mainly to do with the break-even. So what the EA does is, just to explain it in case you didn't know what it actually does, the EA basically establishes, probably better to do it on here, establishes the 5-minute when it works, establishes the 5-minute opening range, establishes the 10-minute opening range, and then it establishes the 15-minute opening range. And it will basically take a trade when we get a breakout of those ranges. And then as it moves, it will move to break even very quickly, and then it will trail a stop behind the move. So basically the idea of an opening range breakout is, let's say, for example, that was the opening range. We take the initial break, it then establishes a second opening range 5 minutes later, then it takes another break, then it establishes another opening range 5 minutes later, then it takes another break. So the idea is when you get a momentum break at the open, it adds to that position and takes advantage of it, and then it trails a stop so that when that move finishes, it gets you out of the position. So it's never ever going to go and get the maximum amount of the move. Okay, it's always going to go to a trail. So my main back testing criteria was to test whether or not having a percentage target was beneficial, whether having and testing what was the best break-even distance and what was the best trailing distance. Okay, there's lots of other settings in here which you don't need to worry about, individual profit targets, all that sort of stuff. But basically I'd established I had individual profit targets set for each one, so a TP1, a TP2, TP3. Then I had an overall TP for the entire basket of positions. I tested all of this to death with 6,500 combinations more. Actually, I tested that up to 250,000 combinations with this. Makes absolutely no difference. TP is irrelevant. It doesn't help your P&L. It doesn't help the profit factor. It doesn't help anything at all. The trailing stop is the main factor which actually makes it perform better or worse. So I tested 6,500 or 6,000 combinations in this case of profit targets, different break-even distances and different trailer distances. So I tested from 100 to 2,000 on this particular instrument on the DAX. So the 6,150 combinations in the spreadsheet is only the combinations which were profitable over a 1-year period. And as you can see, 5,995 of those 6,150 combinations were profitable. So in a nutshell, it doesn't matter what break-even distance you choose, what trading distance you choose, or what profit target you choose. Over a period of a year, this thing would never have lost a penny. Well, it would have. It would have lost in about 150 odd cases. Yeah. So that gives you a lot of confidence when you're back testing an EA. That gives you massive confidence in its ability to make money, because it means that you're not overfitting the settings to make profit. It doesn't matter what settings. I could pick settings at random in here and just go, right, okay, well, let's choose this one here. Bang. Oh, hang on, too far. Let's choose that one. Okay, so if I'd have set TP1 to 1,000, TP2 to 700, TP3 to 700, if I'd have changed the break-even distance to 400, where's the trading distance gone? I think the trading distance was set at a standard one. I think that was set to 300, which was what I was testing at that point. I still would have made 12,000. Yeah, so it doesn't matter what you pick. You pick random settings for the EA, and it makes money on virtually every one. With the Dow and the NASDAQ, I tested 4,000 different combinations, and 3,996 of those. So there's 4 runs out of 4,000 tests with different settings that were unprofitable. 4. Yeah, so the opening range breakout strategy, regardless of whether you decide to go with a 40 pip 50 pip, 90 pip, 100 pip break even, or whether you have a trailer of 500, 100, or 1,000, makes money. It just makes money. So we know the strategy works, which we know it does work. What I'm looking for in this case is I'm looking personally for best drawdown percentage, because if I'm going to run this on a prop account, which is what I'm designing it to do, I've got to make sure that it sticks within the overall drawdown of the prop firm. So here you can see I'm running with 0.25% profit, and it achieved a $20,000 return in a year with a 4.6% drawdown. So I've got 11% on my Forex funds. Is it 11%? I think it's 11%, isn't it? Or 10%, one or the other. So basically I can double that. So what I can do is I can risk 0.5% per position, which takes me up in this case to 9.4% drawdown. Yeah. And that would make me 42k just trading the NASDAQ. Yeah, don't forget it's 4 indices in total. And that's just trading the NASDAQ in the afternoon. I haven't tested this in the NASDAQ, on the NASDAQ at the opening range breakout in Frankfurt. I don't think it'll be as effective. I haven't tested it, but so that's basically how I tested it. And basically, as you can see here, I picked the one that I wanted to use as the best. So there are slightly higher profit factors, but the reason I chose that is because I wanted to keep the break even and the trailer as close together. I wanted it to break even quicker than the trailer kicks in, to prove to me that it's not to do with the break even. So this is protecting the trade, and this is what is making the money. So the tighter this is, the more money in effect you will make, because when that retracement starts, you'll get out faster. But also you'll get out faster on a pullback before the next leg starts, which means you're going to miss this leg. So there's a fine balance between having a trailer too tight and too loose. But this protects the money. So what's going to happen is you're going to have an opening range. It's either going to break out and fail, or it's going to break out and work. That's what tends to happen. A la this morning, it broke out and it flew down. So the idea is, after that initial breakout, if it's worked, we protect the position. If it stops out, fine, we lose nothing. But we're looking for the runners. We're trying to get momentum plays, basically. So that's the NAS. The Dow Jones produced 10K with a 2.6% drawdown on the account in total. So that's absolutely fine. I can multiply that by 4. In fact, what I've done is I've gone with 0.75 to keep it well within restrictions. So in the last year, that would have produced $30,000 with a roughly 7.5%, 8% drawdown on a 0.75 risk per entry. And the DAX produced 40,000 with a 0.5% risk over on 8.25% drawdown. So in total, it's around 120k in the last year. This would have produced on those 3 indices. The S&P, no matter how much I test, I can't find a profitable setting for the strategy. So I've got a feeling I've got an issue with my data, because I can't get this to work on the S&P at all. So I don't trade the S&P, to be honest, and the S&P is the worst out of the US indices. So I'm better off staying with the NAS and the Dow, as far as I'm concerned, anyway. So that's the back testing. So I tested 6,000 there. I tested 4,000 variations there. 3,285 of those, or 2,080, were profitable out of 4,000. So there's 700 runs on the Dow, which proved unprofitable. And on the NAS, as I say, out of 4,000 runs, there was only 4 that proved unprofitable. So very, very, very robust strategy. And then obviously I took these settings, these exact settings that I chose to be my optimal settings. There's a few that are in consideration, but you've got to choose one. And, it doesn't make a massive difference. There's a difference between 10K, 15K, and 8K. They all work. So it doesn't really matter which you choose, but you've got to choose something. So so those are the ones I tested. Then I took these results, I back tested it over another 3 years that the results of the back testing had never seen. So I knew I wasn't curve fitting, and that produced a result across the board every year as well. So that's the back testing. And this is obviously live. And now I've just discovered, obviously, this morning in running it live, there's an issue there. That doesn't affect the backtesting results though, because I visually tested the backtesting, and visually, when it's running in the backtester, it's painted absolutely perfectly every time. I've run through an entire year visually, 365 trades, more than that actually, because I did more than a year, but and it drew perfectly and placed the orders perfectly every time. So I'm not quite sure why in live running this is not working. I think I need to do a refresh on the EA every morning, which is fine because it's obviously taken the wrong levels. So I just need to backtest this. But yeah, I've got it running in here. So as you can see, it's sitting there at the moment, waiting for a 15-minute opening range breakout. And I'll just let that run, and we'll see what happens this morning. So there you go. That's how I backtested it. And that's how I backtest all of my EAs that I develop. I find out what is the best combination, and then I try and break it. If I can't break it, I use it. And I've got a lot of EAs that I use, which are longer term. They all work on the daily time frame, but I've got a lot of those that I use, and they've all been tested in exactly the same way. This is the first intraday EA that I've really developed in detail, because intraday is literally just noise and chop. So it's very hard. But as I say, momentum you can trade, because obviously momentum, we know at 8 a.m. every day DAX goes nuts. We know at 2:30 every day Nasdaq goes nuts. So we have a timing. You know, that's the only thing we can do is play momentum at times of day. So I will be double checking those settings and retesting again today. Obviously, I need to forward test it live, but it's got a lot of promise. And I say the whole purpose of it is to pass prop firm. That's what it's there for. It's there to just trade prop. And I'm only looking for it. I'm not looking for it to make a fortune. I'm looking for it to make me 2 or 3K a month per instrument. So about 6K a month. But obviously, I can't control when it's going to have losing runs. So, you know, that's what prop's there for, isn't it? To put restrictions in place to stop you having, you know, if you have good runs. If I have a good run, fantastic. I mean, the equity curve on it when it runs well is amazing. When it has a bad few days, it could well hit a limit. So we'll see. David, no, it's not on the marketplace, that EA. It's all in development at the moment. I got to forward test it live, obviously, before I would do anything with it. The problem with it as well is, you know, I mean, I tell you all of this. You can go off and build your own if you want to, but you can't use mine. If you use mine on a prop firm, they'll kick you out. You're not allowed to use commercial EAs on prop. It's got to be your own EA, so you're going to have to build one yourself. Unless they don't find out, obviously, then you can use them. But okay, so there we go. We got that sell on. What's that stop loss there? That stop loss is on the buy, so that's good. So what we should do now is the stop loss. What's the distance on that? Opening range. God, look at the slippage on that. Wow. I just got slipped on that entry by 3 pips. Look at that. You all saw that. The pending order was there. Look where I got filled. It's not exactly violent price action, is it? Okay, so that's another thing that's brought to my attention this morning. I'm going to need to retest the EA on a 3 pip spread rather than 2, because obviously there's slippage, 3 pip slippage there. That will make a negative impact. Morning, Themba. Jane, how does it differ from the price action toolkit? So it's basically the same. The basic logic is the same as the price action toolkit. The price action toolkit allows you to trade opening ranges but it only does plots one opening range. You could have it using two opening ranges, because what you could do is you could use the New York opening range and the Frankfurt opening range, and this one you could set this to different times. So you could set this to be the 5-minute opening range and this one to be the 15. But what this new EA does, and then it works the same way. It's got trailing stops and break evens, the same as this has. Yeah, this has a trailing stop system as well. So the main difference is this is designed to add to the positions, but add to the positions at logical areas. So it takes the 5-minute opening range, which was that. Then it takes the 10-minute opening range, which is that. And then it takes the 15-minute opening range, which is that, which is an inside bar. So what it actually does is it doesn't do the third in this case. But what it's designed to do is to take a trade, then add. If that trade happens and it continues, yeah, so 5-minute, 10-minute, 15-minute. If it continues, what you're doing is you're taking a position, adding to it and adding to it again, and then you're getting out with 3 positions. So, which is my premise of, when I'm scalping, I add to my winners. The only way to make decent money scalping is to add to your winners. When you've got a trade that's working, don't take profit on it, add, because it's working, right? So momentum plays in scalping, this is designed to basically add to those positions. So if it only takes one position, because opening range 2, 3, and 1 are all the same, it will only place 1 pending order. It's not going to place 3 pending orders, because right here, for the opening range 2 high, opening range 3 high, and the opening range 1 high, if it had worked properly, would be in the same place. It would only have 1 buy stop. It won't place 3 there, because what if it's a failed breakout? That's a 3% loss. So that's the main difference between this one. The logic's the same. The strategy is the same. It's how it actually gets into the trade is different. It's taking multiple breakouts. But again, in the EA, you can replicate it. You can say, I don't want to take 2 or 3. I just want to take 1. So there's other things, but in essence, it's the same. And I also used it to develop and test moving average. I wanted to test the opening range breakout to death, basically, which is why I built it, because it was all to do with a conversation I had with somebody about moving averages, and the fact that moving average on the lower time frame has got nothing to do with anything, totally irrelevant. If there's a moving average that tells you that this is going down at the moment, if price moves up 2 candles, it's invalidated. It doesn't matter. If the daily moving average is coming down, what happens on the 5-minute time frame is irrelevant. There's nothing to do with anything. What's happening on the hourly moving average has got nothing to do with M5. If the hourly moving average is coming down, you could have an entire day where M5 trends upwards and doesn't get anywhere near the hourly moving average. Yeah, you want to be on board that. You don't want to be sitting there going, oh, I'm not going to take a long because the moving average on the hourly says it's coming down. It doesn't matter. You're trading chop. So it's a momentum play. So I wanted to test every possible combination of momentum movement to try and see if there is an edge, and there is. It's just got to be executed properly. That's the difficulty when you're trading a prop account is you want to trade it yourself. So I'm building this basically to take me out of the equation. That's the idea. But anyway, I'll let you know. So I've tested moving average. So basically, it draws a moving average on, and it gets you out when price crosses above the moving average. That has no real difference or edge than using a trailing stop. Trailing stop does the same thing. I've tested it with parabolic SAR. I've tested it with all sorts of things. And at the end of the day, my conclusion is that whether you use a moving average, you use a parabolic SAR, or whether you use a trailing stop, they all do the same thing. They get you out when price comes back up. So don't overcomplicate it. Trading stop's the easiest thing to test. And it's also consistent. A moving average will be different on each broker. A pip movement isn't. So I'm trying to build consistency into it. So it doesn't matter what firm you go with, what broker you use, it's going to do the same thing. That's the whole idea of it. So yeah, I just wanted to test it to death, really. And obviously the Price Action Toolkit's got thousands and thousands of lines of code in, and backtesting is a little bit slower because of what it does. This is stripped right back. It does nothing but opening ranges. So anyway, but it's working. So we've added to our short. So what I'm looking for now is continuation, breaking back down below these lows. And if that doesn't happen, I will get stopped out up there. But what it will start to do is trail 300. So you can see the trailing stop actually is there, look, because that is, where's the trail on this one? Oh, it's done on, right, so the trailing stop is done on candle. This is all done on candle close, by the way, not on per tick. That's the other thing I wanted to test, was whether it's more advantageous to trail your stops and take profits on tick, which means every tick it will move your stop down, or on candle close. So that's candle close there, and you'll find that that is 300 pips to there. Look, there you go. Plus spread, 307 or 310 it will probably be, because it's 1 pip spread. So so that's why the trailer is there, because that's where the candle closed. So if this candle closes here, for example, yeah, the trailing stop will be 300 behind. So the trailing stop will jump down to there, which basically is reducing your risk on the trade. So as the trade works, it reduces your risk. But it's wide enough that you're not going to get caught on a trend day. Yeah, you're not going to get caught on the pullbacks. It's not going to get you out on the pullbacks. Far enough away. But if we have a massive spike candle, and again, this is stuff I've visually backtested like this. If you have a massive movement which is reaching for a liquidity pool, what tends to happen after it is it completely reverses. So what we want to do is, if we have a massive reach, we want to bring our stop down to virtually nothing on our risk, because there's a high probability that that liquidity run will be a failed breakout, and a failed breakout means we want to get out of the position because it's likely to go the other way. But this has all been tested. I've tested all of this visually. I've been trading this setup for years, but this was originally taught to me as a stock. This is what they use in stocks. The ORB strategy is a very well-known stock trading strategy for trading gappers. So when a stock gaps, so you've got a stock that closes there and it opens there, you get a gap play, which is normally on earnings. The opening range breakout after the gap will either fade the gap because the earnings gap is not as good as people thought it was, or the earnings gap is great and everyone will start either buying or selling that stock and you get a runner. So you wait for the initial stock purchases to be made, and then as soon as you get that break, you take it. And that's exactly the same as happens in this, because it's a stock market. We're trading the DAX, we're trading the top 40 German stocks. The same principle applies. You have an open where the cash balance of trades goes in, and then after that cash balance, they decide the direction for the day, if there is going to be a day, trend day, obviously. So it's the same strategy I got taught about, I don't know, 10, 12 years ago. But since I started scalping, since we've had the pandemic, I've got back into scalping more, and this is part of it. So, but I thought, why not smash an EA together and see if we can get a profitable strategy out of it. I got 0.8% on this scalp that I took, so I'm just going to take this off, I think. So this initial position here was the stop run entry, or shall I leave it on? Okay, so you can see the trailing stop. So just to explain what's happened there, trailing stop now has jumped to here, which is on that candle close, that is 30 pips, 30 points. Yeah, so it's going to trail that and keep trailing that. And the idea is here, if we get a trend day today, yeah, look at where this can go on a trend day. Right. Look at where we are now. So if we get a trend day today, yeah, I'm going to get out somewhere around there. So it's never going to capture the full amount. But that's what it's designed to do. Unfortunately, we've only got one position on today because the initial position failed, but we would have two positions on now. But that's what it's looking to capture, that sort of movement, a trend day. That same as we had the day before on the DAX. Yeah, it just goes. It goes. You'll be getting out somewhere around there after breaking out there. Right. Anyway, so that's that. Let's have a look at the FX pairs. I think I will close that actually. What's the magic number? That's right. Okay, so I've taken that one off. And banked that. Right, so let's have a look at the FX pairs. Sorry, is there any more questions on that? I want to become a programmer like you. Believe it or not. Believe it or not, you're an inspiration to many. Oh, that's nice. You don't want to become a programmer. As your mentor. There's some good programming tools out there, actually, some visual programming tools. If you look for visual EA programming, there's some good visual tools out there you can use, which means you don't actually need to code. I use them a little bit myself sometimes. If I just want to quickly whack together an EA that does something simple to test something, I do it in those sorts of things. Big fan of parabolic SAR, Seymour. Yeah, it's good. It's all parabolic SAR is a trading stop, isn't it? It's just the trouble with the parabolic SAR is it gets left behind sometimes a little bit too much. If you get a parabolic move, the parabolic SAR I find sometimes gets a little bit too far behind. But I've tested basically exit strategies for if a trend starts, exit strategies. I've tested the 5 MA, the 9 MA, the 20 MA, EMA, SMA as well. I've tested parabolic SAR on 5. No, did I test it on 10 settings? I don't know. 5 or 10 different parabolic SARs I tested, and then I tested all the trading stops. The difference in profit, the difference in the actual profit factor or the return is so infinitesimally small. Like using a trailing stop made 36k, using a parabolic SAR made 37, using a moving average made 39 or something. So the difference is tiny. And 1 year parabolic SAR works better, the next year moving average works better, the other year it doesn't make any difference, is what I'm kind of trying to say. They all do the same thing. They trail the price movement and get you out when it stops. So it doesn't matter which one you use. ATR, I tested ATR as well. I've tested ATR as an exit strategy. So I've tested, I tested 20, 3, 4. I tested, I think 8 ATR settings. I think it was 8 or 10 ATR settings. The problem with ATR is it doesn't work as a trailing stop. So if you use any indicator based on ATR, so if you were to use an altered version of the parabolic SAR, as you just said, using ATR, the problem with that is you are playing a momentum play, right? So look at what's happening with the DAX right now. Yeah, look at this thing go. The ATR on this is huge. Yeah. Compared to here, the ATR is off the charts. Massive. I mean, let's look at it. Let's put let's pop the old ATR on. $14, for example. Look at the ATR, yeah, since the open. This is pre-market. So this is where this pre-market move started, sort of around there. Normal, pre-market, ATR is up there now. When you use ATR as an exit indicator, what happens is the stop actually gets further away. So a normal ATR would trail me like this, whereas when it goes parabolic like that, where you have like 5 or 6 candles straight down, the ATR rises, the stop slows down. So it actually gets you out at a worse position a lot of the times I found with it. I have used those ATR-based indicators, and I don't think I've used a parabolic ATR based on, parabolic ATR or ATR, parabolic SAR. But that's what I found. And trying to get out using ATR didn't actually give any benefit. Trying to get in using ATR didn't give any benefit. Using your trailing stop based on ATR didn't give any benefit. The ATR is great for some things, but it doesn't work as a trailer that I couldn't find an edge. Basically, again, I tested X thousand combinations and didn't find an edge. Not above a normal trailing stop. They say this a lot, and it is true. The simplest strategies are the best, which is why I use one condition indicator and one signal indicator primarily. If RSI is extended, I get a signal, I get in. That's it. I'm not interested in overcomplication. The more somebody posted in the Telegram group the other day, didn't they? They've got a MACD, an ADX, moving averages, and the reversal alert indicator on their chart. And they were waiting for ADX to line up with MACD to line up with the signal indicator. The more things you have working in combination, the more complex something is, the more unreliable the backtesting is. If you had in your strategy, if you have one rule, right, and you backtest it, and when this rule is met, you do that. When that rule is met, you do that. And that works across 10 years, making profit all the time. There's no variables. That works. Simple as that. When you have 3 rules on your strategy, all 3 of those have to line up at the same time. There's 3 different combinations of things that can happen. If the market does something, 2 of those indicators might do something completely different to what they did in your backtesting. So therefore, what you find is the more you have rules when you're building a strategy, when you test that strategy, when you go to out of sample test it in an area that's never been seen before by the strategy, it fails because the rules don't work. The indicators were doing something different. The more indicators you have, the more chance there is of one of those doing something different, the more it fails. An ATR is one of those things which fails because look at the ATR, look at the S&P as an example on the daily chart. Yeah, look at the size of the candles here, and look at the ATR of these little candles. Right, this is a normal day on the S&P. Yeah, before the bear market started. Look at the size of the candles now. The ADR on the S&P now is 4 times higher than it was in our bull market. Whatever you did there in a strategy, if it uses anything to do with ADR or ATR, doesn't work here. ADR is brilliant because ADR gives you current extremes for daily range. So the ADR indicator is designed as an intraday indicator. It's like pivot levels. But ATR, the average true range, will vary on every single time frame. So it's less reliable to use as most things, I find. Let's say, for example, there's the guy on YouTube, No Nonsense Forex. He swears by ATR, and he says to use 1.5 ATR as your stop, doesn't he, or something? Either your TP or your stop, whatever it is, which is fine. So if I get into the S&P short now with 1.5 ATR, that's fine. I can do that. But if I get into a trade when this thing's done that, boom, and then pulled back with these massive candles, right? When I get in, the ATR is massive. So 1.5 ATR is going to put my stop down here somewhere, for example. Then when price contracts and my target is 1 ATR away, it's never going to get there because the ATR at the time of trade was way bigger than normal. So it doesn't work. It's all my back testing to do with everything I've ever built and back tested strategy wise, when you introduce ATR, it's less effective than using a fixed pip stop. It just is. I don't know why, it just is. ADR, on the other hand, is different. It's nothing to do with ATR. It's a measurement of the daily range. So it doesn't work that way. But ATR intraday screws everything up. You're better off just going for a standard stop. I've just been for coffee. Why didn't it fire up then, Lee? What? Don't understand. Oh, do you mean the EA? Yeah, I need to look in. I think I know why that is. I've put the rule that I think I've put the rule. The backtester works slightly differently to the real world because on the backtester, even when you're working on an on-tick basis, it doesn't quite fire the same. I've got a feeling the rule that stores the high-low fires after the rule that places the trade by probably a millisecond. So I just think I need to reorder the lines, that's all. But anyway, everything else works. It's fine. Backtesting doesn't affect the backtesting because the backtesting visually works exactly as expected. So I just need to tweak it for live. I have strategy trading rules every time. Yeah. Yes, yeah. I can't. Sorry, Stevie. I can't work it out while I'm on live stream. I will work out later. That's my next. I can test it as well, so I'll live test it later. Basically I can test it on M1. Just all I need to do is adjust these to be 1 minute apart, and I can test it all live very easily. Obviously, I'm going to let it run on NAS and Dow later as well and see what it does there. So anyway, nice opening range breakout this morning, which is good. Let me just, how long we got on this candle? 1 minute, less than a minute. So I just want to see this candle close to make sure it adjusts the stop. Assuming this candle closes lower than that one. And then I'll do some analysis. Those. I haven't got a timer on here. How long have we got? 8 seconds. There we go. So we should jump down. There we go. Perfect. Right. That's working. That's good. Shut it down. Right. So obviously no ADRs today. Nothing. We'll look at all the 4 hours anyway. So indices, as I say today, what I'm looking for is a down day today. I don't know when it's coming. The markets basically have suffered with this US dollar weakness, so they've all had a little bit of a rally. But you know, when you look at the normal US markets, they're all holding up very, very nicely at the moment because we've got that weak US dollar. As soon as that dollar strengthens back up again, these are all going to drop. We've got the smaller indexes being way out of whack. That's a lovely Dow double top as well. It's another reason for a short. We've got the smaller indices being out of whack and the European indices being very out of whack with the US at the moment. We've got very different stocks in the European indices, driven by different sectors to a lot of these others. So you're gonna get a little bit, but they're not normally quite that far out. So when we start this movement to the downside, obviously you can see we are very, very obviously in the bear market still at the moment. And the fact that this recession is just kicking off, there's no reason why we shouldn't be in this bear market, I think, for another 3 to 6 months at least, really, but we'll see. But when that next leg starts, and this is where we should be looking for it to start, that will drag the DAX down with it. So as soon as the sector sell-offs start in all of these, the sectors, these stocks are all in the same sectors, a lot of them will get dragged down. There's a lot of motor and a lot of software in here. So SAP and BMW being two of the biggest stocks in the DAX. Those guys kind of run independently away from a lot of the other ones in the US tech sector and stuff. So, but when the sector starts to sell off, they will be affected as well. So we'll get that move down started. The fact that this is pushed harder, I think, means it will pull faster as well. So I think we'll get a quite substantial sell-off in the DAX coming. But who knows? I haven't seen any analyst. I spent a lot of time yesterday reading analyst reports as well, which was nice. It's really nice to have a day off trading because the market wasn't doing anything yesterday. I actually did stuff I've had on my list of things to do. Fundamentals. I started a new fundamental spreadsheet yesterday as well. Tracking all the fundamentals and doing more fundamental analysis and scorecarding my own stuff. I managed to put that together yesterday. I had a really productive day because the markets weren't doing anything. It's nice. What was I saying? Can't remember. Anyway, so yeah, there's no analysts out there that are predicting the end of the bear market. There's a couple, but nothing that I think, nothing that I'd really listen to. So US, basically from a fundamental perspective, interest rates are still going up. They are still forecasting inflation rising. So as long as those two things happen, the US dollar will move up. The next rates, and this is why I put my spreadsheet together. The next rates for the US dollar where's the US dollar gone? There. Are December the 14th. So typically with rates, what tends to happen with rate announcements is around about 2 to 3 weeks before the announcement, the market starts to factor in the announcement. So the market is listening to the Fed and all the talking heads. That's why everybody listens to the talking heads. If they are continuously hawkish, then it will be positive for the currency. So what they're anticipating is interest rate rises and inflation rises on December the 14th. Therefore, the market should start to factor that in, which means we should see an increase in the prices for the DAX and for the US dollar, which means we should see pressure on the US indices, which should move this back down again, which is hence why I'm scaling into a position on the DAX at the moment. So US, we saw a little bit of strength towards the end of last week. We've had a bit of a downward movement there against the CAD. With the Swiss franc, again, we've pulled back again. So I'm hoping we've found our bottom with a lot of these US indices after the tanking. And this is where the incidentally, this is where the institutions are buying. And this is why the moving averages work so well. So you're looking at the euro US dollar, for example. This is why the 24 and the 72 move so well. It's basically, this is the pullback ready for the next rate. This is the pullback ready for the next rate. Pullback, rate announcement, pullback, rate announcement, pullback, rate announcement. As long as that fundamental stays in place, interest rates rising, inflation going up, the same thing happens. What we had here was dovish comments coming out the Fed, hence being negative US, and we've had the euro being very, very hawkish. And the fact that those two suddenly flipped for a period of 3 to 4 weeks drove this back up again. That's changing. Although, saying that, we are still very hawkish on the euro. So what I suspect we might find now is more of that sort of movement rather than what we've had before, because we're kind of moving into territory of these both getting a little bit hawkish. But we'll see. But again, I'm going to put together as well, this is something I've had on my to-do list for ages, a fundamental analysis spreadsheet. Diamond asked if I'd do a video on fundamentals, and it's really simple. So I thought what I'll do is I'll put together a spreadsheet. Well, I thought what I'll do is I'll put together that spreadsheet I've been planning to put together for ages. which basically tracks the main fundamentals, which is CPI, PPI, rates, and unemployment. Those are the 4 key scorecarding factors used by institutions to determine price direction into a rate announcement. And basically the market moves into rate announcements, which is what we call pricing in, which is why we see the euro going up ahead of the rate announcement, because they said they were going to put the rates up. So the market factors in the rate announcement. If we then get the rate announcement not coming out as expected, the market gets cross and tanks, hence a la Aussie dollar. Prime example, Aussie dollar, New Zealand dollar. Yeah, factoring in rate announcement, and they go, actually, we're not going to do it. We're going to go smaller. What? We factored in you growing your economy. You're factoring in not growing your economy. That's exactly what is lying underneath all of this price action, is the market pre-factoring in every meeting, which is why it's important to know them. So I will put together maybe a little video on it when I've got the spreadsheet together, but I'm putting a spreadsheet together basically which tracks it all. And also you can track the dates, which is the important thing. So what I am anticipating for the US dollar is on the 14th of December, which is there. Okay. From now until the 14th of December, I anticipate upward movement on the US because they have indicated they are going to raise their rates. They have indicated that inflation will increase, and they are both hawkish for the currency. So what we should be looking at from here in is, where are we going to be when this line hits? Yeah. As expected, not as expected. Yeah. That's basically how it will work. So that's what that spreadsheet will allow you to do. It will allow you to figure out when the next rate announcement is, and when the next CPI figures are, and basically come up with a bullish or bearish determination. It's a little bit like the COT report, but a more fundamental based one. So I'll do that. It's on my list. I started it yesterday. Would it be finished next year? Only 3 weekly hits this week. Unbelievable. Yeah. It's been a very weird week news-wise, hasn't it? Like I said at the beginning of the week, we had no news Monday. We had no real news there. We had a bank holiday, FOMC, and all the PMIs, and then we had a bank holiday, and then we've got no news. So that's why we've got no weekly hits today, because there's been nothing to move the market apart from one massive day, which was Wednesday. And obviously, that's basically what we got, wasn't it? But even that was like, push and pull on a lot of stuff, wasn't it? It's just one of those weeks. Not a particularly productive one this week. Right, so let's whiz through all the pairs. I found a really good website actually as well. I'll dig it out. I haven't got it. It's in my email. I found a really good website for fundamentals, which gives a breakdown of what's hawkish, what's dovish, what's bullish and bearish for each country based on whether or not, like, CAD is oil rich based, New Zealand dollar is milk rich based, Aussie is gold rich based. So it tells you what their economic drivers are for exports, and obviously how they link with things, and it gives you basically a kind of a scorecard system really for figuring out what's bullish and bearish. I'll dig it out. But moving forward, obviously rate announcements are all coming out. Everybody is increasing rates. So the difficulty we have at the moment is, because everybody is increasing rates and everybody is being affected by positive inflation, it kind of makes every single currency bullish. When you've got a bullish stance against a bullish stance, you tend to get a lot of sideways movement, which is, again, another reason why we've got probably small ranges happening at the minute, because everything is kind of pushing and pulling too hard against each other at the moment. But Aussie dollar, CAD, we are expecting decent oil movement. Oh, brilliant. Oil's going up. That's lovely. So oil, I'm not far away from, a little bit away from break even on it at the moment. But Aussie dollar CAD basically looking for Canadian dollar strength off the back of oil prices. So we are expecting oil still. No reason why we shouldn't be looking for that $100 a barrel level on oil, which is way up here. Now they've called it for Christmas, and I'm finding it very hard to believe that we are going to make that by Christmas. Look at when we're on a bull run, strong bull run on oil, that's what we will achieve in what, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. We've got, how many trading days have we got till Christmas? 20? And some of that isn't going to be very full strength, is it? So in essence, if they're calling that for Christmas, what they're calling is nothing but bull bars from here, and pretty sizable as well. I can't see that happening unless we get some crazy moves. But this was all caused by the Ukraine invasion. So I'm getting less and less convinced by $100 a barrel. However, they're going to start making moves towards it. But we've got this thing hanging over us at the moment with the Eurozone and this cap on Russian oil prices. So it's difficult to tell what's going to happen with that, unfortunately. But it's the only thing throwing an oil a spanner in the works at the moment for oil. If that cap comes into place and they say they're going to cap at a particular level which they can't agree on, we'll probably find it being negative for oil, and then it will start to bounce around within that cap. So it's either going to happen or it's not. I can't see how the Eurozone can cap the price of oil when they're not buying it from, they haven't got a choice where they buy it at the moment, have they? It's not as if they can say, oh, we're not going to do this. They need it. They're in a big problem. So I suspect that's going to go up. That is going to drive the price of the Canadian dollar up, which will obviously drive Aussie CAD down. Aussie is weak at the moment, but obviously we've had a very weak Canadian dollar, which is also affected by the US, because obviously it's a biggest trade partner with the US. So difficult, very, very difficult one at the moment to figure out what exactly is going on with the Canadian dollar and obviously the price of oil, etc. So we might find we go into a little bit of a range on this one. Aussie, Swiss franc should still beat the Aussie regardless. Swiss franc is way behind on interest rates and inflation because they're just doing better economically, which is good, but they tend to be in fits and starts. So we should find that we get a fairly decent strength off the Swiss franc. Really going to depend on the Aussie, because obviously the Aussie will be moving in Asia. The Swiss franc will be moving during London, New York session. So you get the push and the pull on those two. But when the Swiss franc powers up, it will dump it. So I would anticipate more shorts on that at the moment. We're not extended anywhere on any of these. Aussie, New Zealand started to make movement this morning, came back down again. So yesterday we had no movement, obviously nothing really moved yesterday, but we may have found our bottom. What I really need today is some of these highs, these previous days highs, to get broken. When we can break above these previous days highs and start to get some pullbacks that work, a la what we've got here. Yeah, so we've broken yesterday's high today already in Asia. As soon as that starts, we will probably find some momentum starts to come in on this. But again, very difficult at the moment after this massive drop. There's a lot of sellers in here that have not escaped these positions yet. And we had that massive move go in. So I get the feeling this is the sellers starting to exit their positions, which will potentially form a buy cycle starting. And if that's the case, obviously, happy days. Because I'm in this one at the moment with a long position. So Aussie US, expecting this to come back down as we get some US dollar strength going into the rate announcement next middle of next month. which is only really sort of like 2 and a bit weeks away. So that's the plan on that one. Looking for shorts. We had the short entry extension there, so you would have been in. I mean, you wouldn't have got into it yesterday, so tricky. But yeah, like it short. We just had a reverse alert on the hourly there, so we are coming down this morning, which is great, as you can see, because obviously we've had the indices coming down. So obviously the US dollar's been pushing this morning, which is why the indices have dropped. So the yens, I skipped over the Aussie yen because I want to cover all the yens in one go. Obviously, Aussie yen is the worst of the bunch at the moment. It's just completely sideways. You can't trade that. It's not a clue where it's going. Not a clue. So sideways completely on the Aussie yen. The other yens have all had some strength against them recently. So we've had some decent movement down started since the intervention. So all these have started to push. But as you can see with all of them, we still haven't got any real confirmation of market structure going in. I want to see some real sustained strength in the yen to give me confidence to get into it. At the moment, it's having these little spurts, but it's choosing days like Thanksgiving when there's nobody to battle. You know, it's like taking a gun to a knife fight at the moment. It's like, yeah, US is on holiday. Well done. It's not got any sustained strength at the moment. So I'm waiting to see if these interventions hold. They certainly look like it, but until we get a confirmed move, you know, we start to break down. I want to see the moving averages go red, and I want to see some positive hawkish comments coming out of the yen. And again, this spreadsheet is another real good at a glance view of what's going on with interest rates. So, you know, with pound sitting at 3, US at 4, we got 2 in euro, we got 4 in New Zealand, Aussie we got 3, Swiss franc we got 0.5%, CAD 375, yen minus 0.1. Yeah, they still haven't even gone positive on their interest rates at the moment. So until this starts to change, until they change this and they move to a more positive stance, the yen is going to struggle. Everything is going to potentially be stronger. But, you know, you look at it's exactly what the euro did. Exactly what the euro did. They held interest rates at 0 for years. Yeah, since 2016, 0 rates. And then all of a sudden we started rate increases. Euro starts to move. Yen, we've been stuck in minus 10 since 2016. So we're going to get the same thing happening as soon as they give some hawkish statements. And this is why I'm watching the yen on Financial Juice constantly. I'm watching this, waiting for Kuroda to come out and say something positive about interest rates and saying, yes, we are going to. Inflation is going up, mate. Look. It's going up. It was that. You forecasted that. It's getting worse. If you do not increase your interest rates soon, you are going to implode. So it's imminent. And as soon as they announce that interest rate rise, everything's coming down. Everything's coming down against the yen. So I'm just glued to this, waiting for them to say it. And this is why I look at this every morning. What's happened overnight in Asia? Has Kuroda said anything? I mean, you'd know. You'd open your chart up and you'd see the yen like that. You'd know something's happened. But that's when we're going to jump on. But at the moment, all of these yens, we're just stagnating at the moment, waiting. And this is why these aren't moving, because nobody's got any balls to buy this thing because they know that's imminent. But we've been waiting, you know, how long? We were waiting for since 2016. How long are you going to leave us hanging? But they're in an absolute mess. Financially, they're in a mess. So yen's off the board at the moment, unless I see something extended on the 4-hour or the hourly that looks lovely. Like I took a New Zealand dollar yen last month. We got the extension. Was it last week? Week before last? I think it was an hourly I took, wasn't it? Yeah, I took one of these. I can't remember what it was. I think it was that one. Short. And I got out. But I got out really fast, didn't I? Because I don't want to hang around in it unless it goes. But when you're going to get into one of these yens one day on an extension, and it's going to go vroom, boom. And you're going to be like, right, okay, break even, hold that thing. Or you're just going to take it off. But you're going to get that move. And then every pullback, you'll be able to jump in on it. Because as soon as we get that interest rate rise, yeah, as soon as we get that that moving up, we know from that date to that date, the yen is going to go strong, because they are going to, as soon as they start that, the same as everybody else, as soon as you start increasing interest rates to beat inflation, if inflation doesn't come down, that's all you do. You keep increasing interest rates. -7.5, -2.5, 0.5, 185, 235, 26, 28. We're all in the same boat. Yeah, we've got to get inflation down, got to keep interest rate rises. Interest rate rises and inflation equals stronger currency. Who is the stronger at the moment? Hard to tell, because they're all doing the same thing. This is why it's so difficult and why we're getting these squeezes at the moment, because everything has got strength to it of some shape or form. It's just who is the best economy and who's going to get out of this thing the fastest. And we know who isn't. But when they do, we're going to get that pump. So I'm steering clear of them at the moment, unless, if we see a 4-hour extension like that, I mean, it just about got there. But if we get a decent one, 75, 80, it's gonna happen. We're gonna get that move down. It's just one of them you're gonna catch. It's a bit like the indices at the moment. We're all sitting here waiting for the next leg on the S&P. When you catch it, if you catch it right, and you have the balls to hold it, you can pay your mortgage off. I'm trying to build a decent sized position in the DAX at the moment to try and get a decent run on it. But when that starts to come down, if we get one of these days, like I said, I keep saying it, because it's not, you don't need me to tell you this happens. When we start a leg, we start with a big day. Yeah. Next leg down is a big day. Yeah. That was a big day, but we'd already had the leg down start. But yeah, that's what happened. We're just waiting for our big day. When that big day comes, you're going to get follow through for a week. So this is why I'm watching this DAX so carefully at the moment. We've got an obvious low here in a 9-day range. We happened to break out of it yesterday. This is either a liquidity run, false breakout, and we're going to get that day, which breaks that, and then Armageddon, we collapse. Or we're going to pull back into this range. But, there's no fundamental for anything to say we should be exiting our bear market, is there? There's nothing that says that. So it's just everything seems to be lagging at the moment. We're just not quite able to do it. And the worrying thing is if this is going to carry on until Christmas, David, I'm not bullish on oil, as you may guess. Yeah, I mean, oil, you could not be bullish on it. I'm bullish on it at the moment. But yeah, I mean, obviously oil is coming down very hard. But the thing with oil, and this is why, it's not something I trade, because it's not a very good mean reversion thing, and not a good position trading instrument like gold. It is driven solidly by fundamentals, and the thing that can shift on this at any one moment is an OPEC announcement, or a price cap announcement, or a pipeline blowing up, or a war starting. As we know, this thing is affected massively. Oil drives the entire world. Our power stations run on it, our cars run on it, our infrastructure runs on it, our logistics run on it. If we don't have it, we're all screwed. Every country will stop operating. So it is a massive, it has a massive fluctuation on any kind of movement in news. Yeah, OPEC come out and say, you saw it here, didn't you? Prime example. I posted the news event, didn't I? Saudis increased production against OPEC regulation. Saudis say, no, we didn't. The slightest bit of news coming out makes this thing go mental. It's having a lovely little run at the moment, which is good because I just need it to get back up to here really. That'll be all right. But everybody's got a stance on it. It's fine to be bullish or bearish on it. It doesn't matter what you are. It depends how you're trading, doesn't it? But every time someone hits the buy button, someone else is selling. So there's always a buyer for a seller. But technically, all I am anticipating at the moment, personally, is us either to hold into a range or to go there at some point. Not based on anything else but supply and demand, rules, laws, and the fact that every institution under the sun has a long bias. But every institution under the sun has been wrong many times before. They don't all make money all the time, do they? This is why they only make 10 to 15% a year, because they're super cautious. When they say, oh, it's going up to here, they've only got 2% of their portfolio riding on it. If it goes down to there, they go, oh, well, it's wrong. We think we're coming down now to X, and they'll make up another one. How many times have you heard, analysts calling for a level, and then it doesn't get to the level and they call another level? But everybody forgets about the level they called before, because now they've called a new level. They're like, oh, they think it's going there. They forget that they called it down to there and it went up, so they decided to change their mind and flip long. It's just the way it works. But anyway, Jane, non-farm payroll next week. Non-farm payroll has nothing to do with unemployment figures. Non-farm payroll isn't a leading indicator like CPI, interest rates, unemployment. It's a reactionary indicator. So it reacts to fiscal and fundamental policy. So that's why you have whipsaws off of it, because whether it comes out big or small doesn't actually affect the Fed's decision-making process. What someone's being paid has nothing much to do with anything but cost of living. It is an employment figure in the fact that it's how it's the problem with non-farm payroll is the way it's calculated. It doesn't calculate numbers. It calculates an amount rather than numbers. That's why the unemployment figures tend to trump it. But it is an indicator of what's happening in the employment world. So it's just not. It's one of those. It's a weird one. It's like the fact that it's on here as a red. It's not on here as a red because it has a massive impact. Yeah, the reason people trade it. People trade non-farm payroll. Yeah, what's actually moving the market is the unemployment rate. Yeah, that's what's moving the market long term, and that's what the scorecards and the analysts are looking at, because that does affect Fed policy. That's what moves the market on the spike. But after the movement, and this is why people say, oh, non-farm payroll did a whipsaw and then it went. No, non-farm payroll did the whipsaw. The unemployment rate figures made the market start its next move, because that's what they're scorecarding in to indicate what the Fed is going to do with interest rates moving forward. But they just happen to come out the same day. But it's all in the same all the same sort of stuff. But World King, tell me good ADR trading view indicator. No idea. Don't use trading view. Can't help you there. Right. CAD Swiss. So CAD Swiss basically is it's a difficult one. It's kind of bullish against kind of bullish. We've been very, very sideways, obviously, as you can see. We had some strong Swiss franc this week, which has driven it back down again. Long term, obviously weak because of this massive CAD. And again, looking back at that spreadsheet, that was an unexpected rate announcement. That's a really good example of what happens with those pricing in. So this is the market pricing in the interest rate for the Swiss franc. This is the Swiss franc turning around and going, haha, not as you expected. And this is everybody jumping ship. Everybody that was buying this was expecting that to continue, because they were expecting a rate to be what we were expecting it to be. When the rate doesn't come out as expected, they have to dump those positions because they're wrong. And it's a free-for-all. basically. Yeah, so basically we've got a downwards, obviously, spiral at the moment with Swiss franc strength. We've had CAD weakness. Should continue in the same vein. So I'll still be looking for shorts on this one if we can get any extensions to the upside, looking to get in on pullbacks, basically. But at the moment, it's just not doing it. Since we've had this massive sell-off when we got extended last time, we had the reversal alert. Look at that. There's a Head and Shoulders that held. Wow. Don't see those very often. That's not a joke. You don't see those very often. You'll find way more failed Head and Shoulders than you'll ever see ones like that actually work. Okay. When everybody's selling their courses on Head and Shoulders patterns and price action patterns, this is the example they will show you. I think that's the first one I've seen in the last month. It's actually worked and held. But anyway, so we had the reversal alert and the retest, which is the right shoulder. But it absolutely fell out of bed. So if you took that short, it only just got extended though, so it just wasn't quite enough for me personally. But it came down very, very nicely. Since then, we haven't had an opportunity to get in on any pullbacks, but that's what I'll be looking for. Broken structure. So we've taken out these lows, hovered about, and we've moved down again. So if you drop down to lower time frames, you could take entries on lower time frames. But after an accumulation like this is what we've got on the DAX at the moment, isn't it? It's just sideways accumulation. I'd be a little worried about taking the first extension on RSI, because you got all this up here, potentially all these propulsion gaps, which could well come up and get retested. So we could go into a sell cycle and then come up into a buy cycle up there. I'd be much more interested up there, and in that case you'd be probably looking at being extended on the 4 hour again, somewhere up in the 24.72 zone, which is where I would like to get in. Yens I've covered, and no idea. Euro odd. So the euros, again, we've had nice strong movement. They are hawkish, very hawkish on the euro at the moment. I still don't feel it's that strong against the other currencies, but I'm undecided, and as you can see, the market's a lot undecided on it as well against a lot of these things. So we've had a very weak Australian dollar, we've got a very weak euro. You can see that obviously this is just going sideways at the moment because we've got two weak currencies against each other. And at the minute, you should really, in theory, be looking for longs. This is at the moment one of those currencies you could trade in either direction on any extension, because all it's doing is ranging. That's going to end at some point, but again, we've got a while to wait for rates on these, and everybody's sort of talking about a slowdown in rates. The euro, however, Lagarde doesn't seem to be talking about a slowdown in rates at all, and is a lot more hawkish and bullish about the euro than most others. So I spent a good hour or so reading up on, I found a site that gave me all of the speakers' comments for the last month. So basically all the talking heads, yeah, so all these basically, and it summarized every single talking head and picked out the hawkish and the dovish comments, the bullish and the bearish comments for each. Hawkish is just another way of saying bullish, and dovish is another way of saying bearish. And the euro was actually, when you actually read the analysts and the economists read into it, she's actually talking much more about a strong euro moving forward than a lot of the other countries are. So again, that's more of a confusion to me, because I'm so embroiled in a weak euro, because I've been in a weak euro situation, not necessarily with the odd, but in a weak euro situation for such a long time. It's very hard to flip your bias long. You need a real good reason to say, right, okay, I'm going to go long now. But at the minute, you can see on this 4 hour chart, it really doesn't matter whether you hit the long or the short button. It's up and down, up and down, up and down. So you can take anything you like, really. If you went down to the hourly chart, yeah, and you said, screw it, I'll just hit the button every time I get an extension, you're going to make money on it. And I think that's the way this is going to continue. At the moment, we're just going to get this sideways movement continuing. It's going to be very hard. If we break out of that high there, that's no problem. We'll probably get a reaction there. If we break that, we'll probably get a reaction there. To the downside, obviously, we've got this low, and we've been making new lows. So, we are, market structure-wise, we are bearish. We're more bearish than we are bullish. But it doesn't get very far, does it, before it comes back? So, you could take an extension there or an extension there. At the moment, we've had nothing for the last week or so. And, reverse alert after reverse alert means sideways. So you can take your pick on the euro odd at the moment. Euro CAD, obviously weak US, weak CAD. That is potentially looking to flip. So again, I would be looking for shorts on this one. Just had a short opportunity there. It's pushing up again this morning. And you've had a couple there, opportunities for shorts. But it's still quite strong. So again, it's very difficult to trade this one at the moment because it's not really trending very hard. It's more having fits and spurts of moving up. So again, you could be bullish on it and wait for extensions to the downside on the hourly and go bullish. Or wait for extensions to the upside and take the reversals short. But it's not really going very far, very fast at the moment, is it? So it's a tricky one to call. Long term, medium to long term, I would expect the CAD to be stronger. Purely based on the fact that we're all stuffed and need more oil at the moment, and that's their main export. So the world is crying out for what they make. So even if they don't get to the front of the queue, at some point we're going to need the middle to the back of the queue, and if CAD's there, they're going to strengthen up. So I get the feeling we're going to find some strength coming off of CAD, but again, that is all a lot related to this. And the US dollar, the main trade partner of Canada is the US. If the US is weak and not buying, Canadian economy struggles. So it's all very difficult to sort of unpick at the moment. But again, one of those ones you can kind of take in any direction. I'm more interested in shorts at the moment on it, but there's better ones out there. Like Euro US, for example, is a much better short. Euro Swiss, I think, is a much better short. So again, this is another one of those that struggles. We're in a big flag at the moment. If this is going to push up, there's an awful lot of resistance on the way up. So from a position trading perspective, when you get into your first one, you've got a lot of hurdles ahead of you, which can give price a bounce and push back down from. So I like it for shorts. We had the last extension up there, which has played out very, very nicely. But again, at the moment, we're not really going anywhere. Sideways. Very hard to find extensions on the 4 hour at the moment. We're not getting many. We had some recently, but it's just, the market is not, there is no currency at the moment. And this is why the RSI is struggling a little bit at the moment. There's no currency that is massively strong and massively weak. When you've got one country that's putting up its interest rates and one country which is reducing, it's an obvious short. But you haven't at the moment. We're all pushing in the same way with the same problems, and it's causing a lot of that, or a lot of that, or a lot of that. It's either all range bound or all squeezing at the minute, which is very difficult from a position trading perspective. But from a fundamental perspective, I would say we want to be looking more for shorts again on that one. Euro pound, a sideways mess. Again, small ADR. The ADR got bigger on this because of the Liz Truss incident. But it's calmed down now. How many days ago? That was a long time ago, wasn't it? Yeah. But we've got volatility, so you can see obviously normal daily candle sizes on this one before Liz and the Bank of England. We are much, much, much more volatile now. The ADR is increased on it quite a lot, but there is every opportunity of this just to return back to normal ADRs, which will drop down to something like 40 to 50, and we'll just do that. Again, same thing, it's all economics. Euro and pound, very close trade partners, therefore we tend to keep the currencies in sync. So difficult. Any extensions on this one, you can take, but you don't get them very often. And when you do get them, they take a week. It's one of those instruments. It's got a small ADR. When you do get into something, it takes an entire week for the trade to play out. It's just not a very good thing to trade. Euro yen covered. Euro New Zealand, very, very messy at the minute. We're in a massive range. Again, lots of push, lots of pull. New Zealand dollar, very, very strong, doing well with its interest rates, etc. Euro starting to get stronger, but New Zealand dollar at the moment has got the edge. If we get an extension to the downside on this, I'd be quite willing to take a long. Let's take that US rate announcement off. But there's no real bias, is there? On this at the moment, we've had a big old squeeze to the upside. Then we got the rates come out, and then the New Zealand took over because their rates came out. Euro is next, so in theory, we could well get a push on this. So the entry was down there. I've got a euro short on against the US at the moment, but that's not a bad looking entry. If we get a reverse alert on the 4 hour, which it looks like it's just about to give, that's a pretty good entry. But you're buying straight into potential resistance. And we're just going into the red, into a downtrend. So hard one to forecast, really. It's a very, very squeezy pair, as you can see. But if you look at the movement there, we're getting into this balance now. We could well just sit in this balance until Christmas and go nowhere. So I wouldn't be worried about taking it long or short, really. Explain me what is ADR, average daily range. So it's the average daily range of a pair over the last 10 days. There's a video. If you go onto the, oh, blimey, that's blurry. There's a video on YouTube about ADR. There you go. My most popular video, look. How to profit from average daily range. Go and watch that. Not now, but in a bit. What is the purple indicator? That is wide range bar. Again, go into the Bootcamp. It's all YouTube. Go and explore my YouTube channel. On the Position Trading Bootcamp, it's day 3, indicators. Explains what the wide range bar is. It's here somewhere. 1, 2, 3 gap. It's called at that time. It changes its name depending on what the indicator is called, but basically they're propulsion gaps. They're impulse candles. Oh, hello. Hero Wars. I don't know why these guys keep advertising to me. I don't have never and no intention of playing Hero Wars, but for some reason they're also just spending a lot of money on marketing at the moment, aren't they? So yeah, Euro New Zealand, very tricky. The thing that worries me about this one is we're entering back into this area of balance, and we've been here before, and we may well stay. So if we are going to go into a range, you want to make sure you're buying at the lows and high and selling up at the highs, really. But yeah, no real signals on this at the moment. We had an extension on H4 on yesterday, so entry would have been Asia this morning if you took that one. Euro US. So I'm in this one short at the moment. I've just got a single position on this at the minute on the Euro US. Oil's doing very nicely. Oh, come on, oil. 8 pips away from break even. Euro US. So I've just got, and I've got 2 on it now. I took another position on this one yesterday. Yeah, so initial entry, second entry. Just waiting, basically. There's obviously nothing much moved yesterday, and we've not really gone anywhere today either. So from the Euro US perspective, I'm out of that DAX trade. So I just want to see why I got out of the DAX trade. No, got out 39.45. Okay, so that's the trailing stop basically kicked in on DAX. Got me out of that. There. On 45.47. Why did that close that? Don't know. Not a stop loss, is it? Oh, God. More testing needed on this EA. I've got a rule triggering for some reason. So 1 sec, let me just quickly check that. I've got a stupid rule set up. .1. So the trailing stop. So that's only 8 pips. Also, I get a 10%. That's fine. So that's turned off. Don't know. Oh, well. More testing required. Anyway, made a profit today. But anyway, DAX is coming down pretty hard again at the moment. Sorry, so euro US dollar. I've been short already on this one. Got extended yesterday. Previous extension up here. This is where I got in up here previously. So obviously we had more weakness on the US dollar. I'm waiting for the US dollar to power up at the moment, continuing this downward spiral. Basically, there's no real reason why the US dollar will suddenly become a lot weaker than the euro. Yes, the euro can power up, but not to the point where it's going to take over as the world's darling currency and beat the US dollar into submission. So just waiting for the US dollar really to strengthen up a little bit. I can't really see why the US dollar is quite as weak as it is at the moment. But we are starting to strengthen up, as you can see. So we had the reversal alert on the 4 hour, and we are basically just retesting at the minute. So yeah, just waiting for strength to come through at the moment on that one at the moment. So yeah, business as usual with euro US, looking for it to come down, looking for US dollar strength. All the pound pairs, I can't make a decision at all on the pound. We were all waiting for fiscal policy, and we got the fiscal policy 3 weeks later than we were expected to, and the market hasn't batted an eyelid. The market has got no idea which way this is going. So I have to go with what every economist is forecasting and what the fundamentals are saying, which is the pound is going to weaken. So I'd be looking for shorts on all pound pairs regardless. There's nothing, I don't think, apart from maybe the euro and at the moment the yen, that should really be stronger, should be weaker than the pound. So we should be looking for everything to be coming down. I think the problem is we're just missing some strength on most of the currencies at the moment. So everything is kind of moving in one direction, which is up, but not with any strength. So as soon as you get some strength coming through off some news, which is obviously what we've been missing this week, is news. Next week we've got lots of it. We've got OPEC meetings next week as well. That's going to be a big day Thursday for oil. I want to be out of oil by Thursday. I just want out of it. We've got non-farm payroll. We've got GDP figures again, which kind of work. We've got Lagarde talking on Monday and on Friday. So we've got some big potential movers next week. So I think we're just waiting for a downward move to kickstart on the pound. So all of these, if you get any extensions, pound odd we had last week, but again, gone nowhere. Was that this week really? Pound CAD pushing up on the weakness of the Canadian dollar. As soon as that flips, this should have no problem coming down fairly substantially. Pound Swiss sideways. Pound yen, obviously we know about, is going nowhere. Pound New Zealand, the most sideways thing in the universe at the moment. Just can't do anything with it. And the pound US, again, starting to roll over. I'm in the Euro US. It's the same thing, just waiting for the US to roll over. So all of these pound pairs, we got a lovely potential entry right now on the pound US dollar for a short. Pound New Zealand sideways. Pound yen, yen. Pound Swiss, again, lovely extension on the 4 hour. Good initial entry point there. Nice support resistance above. If it does push up for a second entry. Pound CAD, perfectly poised for short. Pound odd, just come out of extension at the moment, but only by going sideways. This odd, we've had very, very weak Australian dollar, and again, anticipating some strength starting to show through, and the cycle started to change on the Aussie. So again, this should start to come down. So all of these pounds are set up beautifully for shorts, just not getting anywhere, are we? It's just not going anywhere. Is it 9:30? So I'm just trying to figure out why the EA closed that position. Just want to see what time it closed it. $20. No, it's not even a time-based thing. Just figuring out why. I'm going to have to run the simulator on that today so that it replicates those trades and find out why it closed that. I've got a rule in there that I haven't turned off. There's a trouble with coding as well, which again is whoever said earlier, I want to be a coder like you. No, you don't. Drive you nuts. This is what drives you nuts. Yeah, you get something and you get it in the strategy tester. It looks brilliant. You put it live, and all of a sudden it starts behaving like that, and you're like, "What?" But when you're coding, you tend to leave an awful lot of code lying around in whatever you're coding, and you comment it out to make sure it doesn't run. And when you comment something out, there's every chance that you'll break another bit of code that relied on something that was in that bit you commented out, and then all of a sudden it all starts unraveling. So I'm not what you would class as a organized coder. Some people have very strict rules and logs they keep of everything they do. I just basically change stuff and then see what it does. So yeah, I don't work that way. So yeah, long and short, the pound, I like them all short at the minute. I'm kind of tempted actually. I've just everything I'm in at the moment is going the right way. I'm tempted to get into a short on the pound, but I'm just trying to think what is the best one at the moment. I really like the pound CAD, and I like the fact that the pound CAD, basically we're right up sitting here at the moment with this massive day, which is going to be attracting shorts. I also like the pound Swiss because I think the Swiss franc is due a power up as well. Pound US, I'm obviously already in Euro US, so I wouldn't take that one. But pound CAD, I think, is probably the best out there at the moment. Best of the bunch. Pound CAD or pound Swiss, either of those. Just had a reverse alert. That's a much nicer retest of the reverse alert there. Go on, DAX. DAX is tumbling out of bed. That's really annoying. That's closed me out. So I'm running a 30 pip trailer on that entry. Which would have been there. So I wouldn't have been stopped out on it. Stop would be sitting there still at the moment. and still be in this. How annoying. Trials and tribulations of the programmer. Right, so that's all the pounds. New Zealand. New Zealand just starting to roll over, New Zealand dollar CAD. So again, we're seeing some strength coming through on the Canadian dollar. We've got oil prices going up. You know, this, if you want to see how everything is related, yeah, New Zealand CAD coming down, oil going up. So New Zealand CAD, very nice. We're just about to get an hourly reversal alert on that one. We're extended and embedded on the 4 hour up here. So that was a lovely opportunity for entering long. However, you would have probably been in it somewhere around here. In fact, I'm in New Zealand dollar CAD short already at the moment. I've got 6 positions on this. I haven't taken another one because I've got a position literally just here. So this is all starting now to come down. So I've got in from here. I've scaled into this. Average is somewhere around there, around 125 ADR. So looking for this to start to come down on this Canadian dollar strength, but taking its sweet time. So if you're not in this, good entry now. You just had a 15-minute reversal alert yesterday, just about to get the hourly. So structure's shifting downside nicely on that one. New Zealand dollar Swiss. Again, highs just taken out. So we had that double top, which got stop run. Yeah. And then enticed everybody short. Everybody put their liquidity there. They just grabbed that liquidity. So at some point, we're waiting for that Swiss franc power up. That's going to come down very, very nicely and very hard. So that's looking good as well. So I've got a scalp short at the moment running on my other funded account on the NASDAQ. And it's coming down very, very nicely at the moment. So bear with me 1 second. The hell? I just banked there. $146. Sorry, bear with me a second. Oh, right, yeah, okay. I've banked 2 of them already. Right, okay, that's fine. Jesus. $10 swap. Right. Well, that's good. Okay. Sorry, I'm back with you. Multitasking, I'm a man. I can't do that sort of stuff. New Zealand dollar Swiss. Yeah, so nice looking M pattern reversal starting on the hourly. Obviously, that will look much nicer. There's your retest on the reversal alert. So if you're a retest entry trader, there it is. Liquidity taken. So this could be it. Although obviously we are just coming out of, again, another week of sideways. You know, it's very, very difficult with everything this week. It's everything's sideways. So always run the risk when you've got stuff which is rangy of either it being a breakout which works, or most of the time, 80% of the time, breakouts fail. Yeah. This is why the smart money concept, if you like, exists, because all a smart money concept is the opposite of a breakout trader. So a breakout strategy is very simple. A smart money concept strategy is the opposite. It's a failed breakout. So all smart money concept traders are, if you think about it, are failed breakout traders. So it's the same thing, short on New Zealand dollar Swiss. New Zealand dollar yen we've covered. New Zealand dollar US dollar. Hourly 4 hour reverse alert just going in. As you can see, we're nicely extended. M pattern. There's a nice M pattern on the RSI. So yeah, reverse alert just about to go in on that. Lovely US dollar strength. As we can see, the indices are coming down like nuts. We've got US dollar, the New Zealand dollar US dollar on the hourly just about to get the extension as well. So shorts on that. Looking for this buy cycle to start selling off at some point. Don't know when, but yeah, waiting for this US dollar strength to come in, which potentially is right now. So that's looking good as well for shorts. And obviously all the US pairs, we've been waiting for the longs. The fact that the CAD has beaten down the US dollar just shows you how weak that US dollar's been. But structure shift, we got the reversal alert on the 4-hour last week, and the retest. Yeah, and this is just pulling back and retesting the initial breakout again. So looking for, just market structure to shift back to the upside on the US dollar, which it seems to be wanting to do this morning. So it's good. US dollar Swift, same thing, nicely extended. Same as this one, extended, nice push, got re-extended. We kind of double bottoming on it. I don't think that, I think that's a total overreaction. Basically we got some Swiss franc strength exactly the same time as we got that negative news on the US. So this is a lot bigger than it looks. This a lot bigger than it should be, if you like. We just had these two reacting at exactly the same time in opposite directions. You get one pull and one push at the same time, you're going to get double the distance move, aren't you? So I think we're coming back up, and we should at least retest that area. If we were to have a weak US dollar moving forward, we should at least be able to get back up to there, shouldn't we? So I think that's a good long, but you've missed it. Reverse alert was yesterday on that one. First proper reverse alert on that for a while. So yeah, that's starting to play out, but we'll see. We need this US dollar strength to hold, basically. And US dollar yen, guess is as good as mine on US dollar yen. I certainly wouldn't want to be longing it. But saying that, yeah, and we've got a massive propulsion gap to aim for up there. So if we start to get anywhere near that, though, I think we'll have more yen intervention, won't we? So yeah, we'll see what happens with that one. But that's it for today. Looks like we may be starting to profit take move on the Euro US. Yeah, just about to get the alert on the hourly on that one. So I've only got the 2 positions on this, but this is, again, this is a absolutely beautiful level, which we tapped into. They pushed above it, enticed everybody long, came in, took out their stops. Everybody that was short is still in it at the moment, and it's come down. So there's a lot of liquidity sitting there after that bull run. So this is, as much as I can see the strength, and I'm expecting the indices to drop, which means I'm expecting the US to rally. We haven't got any news catalysts at the moment, so I'm not sure. Hopefully this is it, but it could well want to push up a little bit more. It's going to take quite a lot to do that, though. But it's within an ADR today, so don't forget, we're coming off the back of Thanksgiving. Yesterday, there was very light liquidity in the market. We saw a lot of slippage yesterday, didn't we? On the DAX, I mean, the DAX slipped so fast on reducing volume. I put a post in the Telegram group. It slipped on low volume. There's a good chance this afternoon we'll have sore head syndrome, and there may not be the volume this afternoon that we're expecting. So we could get some slippage this afternoon. There's going to be a lot of trading this afternoon. Everybody that didn't trade yesterday is going to be in on the game today. But it's whether or not the big players' volume is in the market today. We won't know that until later. So I think New York is going to be the real mover this afternoon. But as we're starting some very decent movements in London. It's whether or not we can, get a breakout and hold it. That's rejected at the moment, so we'll see. But yeah, very strong US this morning. Indices all coming down very, very fast. All selling off. Even the good old FTSE is selling off. Yeah, so if you wanted to use the price action toolkit to kind of replicate what that new EA that I've built is doing, you've got auto trading here for the opening ranges. So you can set the Frankfurt initial opening range to trade, which you can set to 5 minute. You could set the second Frankfurt opening range to 10 minute, and then you could set the New York initial opening range to 15 minutes. Yeah. So what you would do is, that should actually be 10:05. You'd set that one at 10:10, and then you'd set that one at 10, and then you'd set the New York opening range at 10:15, and then set that to be 11:30, and that's basically, and that's not used. So you would be taking initial Frankfurt, second Frankfurt, third New York, not fourth New York. Yeah, that replicates basically the new version, if you like, of the opening range breakout that I've built. And then trailing stop would be set to 300 for the DAX. That'd be right for the DAX. The only thing it hasn't got is break even. So if you wanted to kind of semi-use it, you would just have to, after a certain amount of time, break even it. To be honest, though, I mean, I did, when I was doing all of my testing, I did another round of testing on the EA with no break-even stop. And I did another round of testing with no trailing stop, just using TP targets as well, and also using the EMA and the other ones I tried as well. But actually not using a break-even stop and using that trailer, the difference is very, very little. So on the DAX, for example, I've got a 200 pip break-even and a 300 pip trailer. So it's only 10 pips different. So you'll find this thing's going to, the worst case scenario is on the trades that don't work, you might be 10 pips more in loss. But on the ones that came back and stopped out at break even and then carried on, those will all make you a hell of a lot more money. So again, I tested it. Every single variation of the run pretty much that I tested, not using a break even, worked. Because the trading stop did the job. So you can replicate the new EA in the price action toolkit, except you haven't got the break even. You've got the target exit strategy. Again, I set mine to 10 because I found that there was no difference. You're better off letting it run. If you're going to get a day like today where it is just going to go and it's going to go and it's going to keep going, don't set a profit target. Don't say get me out at 3% profit, because this thing could do 7 today. Let the trailing stop get you out when this thing's finished its move. You know, there's the candle that would have scared everybody out. It's looking like it's continuing, isn't it? We've got lower low, lower high. Wants to carry on. So yeah, you can replicate it in the price action toolkit. That is on the market if you want to go and get it. You just got to fiddle with it. So daily high and low is always respected. No, nothing is ever always respected. Never. There's nothing works. Nothing works. And this is why people, I think I don't have many people watching my channel, because I tell it like it is. Everyone wants to find what works in trading. There isn't anything that works in trading 100% of the time, or 70% or 50% of the time. Yesterday's high and low is not always respected by any form. Yeah. So there's yesterday's high from that day. It went through it and came back down again. There's the yesterday's high from this day. It came back down, tested it, and then rejected it. That's the opening rate. That's the high of that day. It pushed up, came back down, rejected it, and pushed back up again. I don't know what you mean by respected, but yesterday's high and low are very, very, very important levels, because it's where price couldn't get beyond the previous day. So it's always going to come back and have a go. Yeah, look at this. Yeah, where have we stopped? To the pip. Yeah, not to the pip. Yesterday's low is there. Look at the spread. The reason for this happening, the reason, the mechanics behind that is today, a load of people woke up this morning and they put their orders in the market. And they put their orders in the market at yesterday's high and yesterday's low. So they set a limit order there and there. So when the market gets there, their limit order triggers, which creates a frenzy of buying. When we get to yesterday's high, you'll quite often find it's double top, isn't it? It doesn't work to the pip. That one did, but it's an area where we're going to find a lot of resistance and a lot of selling because a lot of limit orders are sitting there. A lot of limit orders are sitting there. Yeah, that's why it's respected. This level here, we pushed up into it and rejected. Then we pushed through it, and it took a lot of buyers to get through there, and they ran out of buying pressure, and the sellers took back over again. Doesn't mean it's not, if it was respected, as in it doesn't get past it every time, we would just literally do that forever. That's not what happens, is it? Obviously. So, but these levels are respected because there are a lot of orders sitting there, and to get through those orders takes a lot of power. It takes a lot of power to get through those orders. And that's why you get rejections at breakouts. That's why most breakouts fail, because if you think of it like a door there, right? And you've got a cannon pointing at that door. You've got 3 balls. As soon as you've fired those 3 shots and smashed that door down, you've got to reload. While you're reloading, are you trying to find more buy orders? The people on the other side will rebuild the door. So now you've got to shoot back at it again. Yeah, which is why and it's an analogy I use all the time. Knocking on the door 3 times. Yeah, you'll find support and resistance levels will fail the first time. Often they'll fail the second time. If you knock on the door the 3rd time, they usually get through. And it is literally a case of everybody saw that level fail. So they think next time we get there, it failed last time, so it's probably going to fail. We'll put a limit order in. Because of the crowd mentality on the part of us as retail traders and the institutions who all do the same. Institutions are people. Yeah, we are trading opinion here. The only thing that is happening and making this go up and down is opinions. Is an institution's opinion against another institution's opinion, or an institution's order book against another institution's order book. Yeah, so they will get in there and it will come back down again. That doesn't mean it's not going to go through that level. It just means that everybody saw the same thing and reacted in the same way at the same place. That is why they get respected. And the power it takes to slam through that, i.e., if you want to go through this level and there's 1,000 sell orders sitting there, you need a buyer with more than 1,000 orders to be able to price through that. So we need an institution there with 1,000 orders, and then we need 2 other institutions sitting behind them. Yeah, with that. So we hit it, we fail. Then they come through it and they push. And that's why we get propulsion moves. Yeah, propulsion candles happen at highs and lows. That propulsion break, or propulsion gap, as I call it, is basically price pushing through a level, and it's the sheer volume of buy orders that makes it go fly through, because it's all the sell orders sitting here, all getting gobbled up, and then it pulls back and it goes. Price will always come back and retest those levels most of the time. Yeah. That's why it's there. That's what the propulsion gap indicator is for. To show you areas of high liquidity. We know there's high liquidity in those zones. Look, push, retest, drop. The reason that happened, the mechanics, again, you've got to understand the mechanics. If you're going to trade this market, you need to understand what's going on under the hood. The sellers pushed and followed through. Yeah. This here, this candle is where, zoom in so you can see it. Oh, wrong button. Where's that propulsion gap gone? There it is. This candle here, big sell candle, is the first candle that started this break. Yeah, so we made a new low. We broke out the low, right? You can see what happens when we broke out that low? It stopped and immediately reversed. Why? Because the amount of orders it took to execute, to drive price down to there, the banks had spent all their money. They'd gone bang, they smashed it. It's like, right, okay, we've got through. Now we're out. There's two things happening after this move. One, they've run out of sellers. Two, those sellers are now taking profit on that move. And to take profit, you have to become a buyer. So it starts a buying frenzy. But then we get up to the point where that sell cycle started and the sellers step in and add to their orders. Yeah. So if you're a seller here and you've started that move, if you haven't taken profit yet and you want to take profit down here, what are you going to do? Make sure price doesn't get back above your buy price. Why? Because if it does, you go into a loss and you have to take a loss on your account. I'm an institution sitting on $20 billion. Why would I let you come up here? Go on then, chuck your $200 million at me. I don't care. I've got 20 billion. You push it back down again. There's only 10 banks that have got enough to really make this thing move. And that's what they're doing behind the scenes. Why do I know that? Because I know someone that used to work on the desk. That's what their job is. Market making. Their job is to accept orders on behalf of many, many clients and execute them strategically so that they make money. These propulsion gaps show you, right? There's a high. We pulled back from that high. They pushed up towards that high and they slammed through it super fast. Like, yep, I'm going long. I don't care how much you've got. I'm buying every single sell order you can throw at me. And then everybody that went short goes, oh no, I'm out. And as soon as they get out, to get out of their short orders, they have to buy, which makes them puke, which is why they call it puking. And then it makes another buy frenzy because the people that made that buying happen want to add to their orders, and the people that want to sell want to get out. So they sell to the people that are buying and it pushes up. When we come back down, if these guys that started this move have not moved it high enough to make a profit, they will add more position. That's literally, think about an engine. You get in a car, you drive it. You don't think about what happens under the hood. When you're trading this thing, if you don't know what happens under the hood, you're just going to get caught the wrong side every time you get in. And that's if you're scalping, obviously. If you're trading chop like this. If you're position trading, though, and you get it wrong, it doesn't really matter. Anywho, that's all covered in the bootcamp. Right, that's all I've got today. So stuff's moving, which is good. Everything's going in the right direction. Oil, we are still pushing today, which is nice. Again, these are used for targeting propulsion gaps. Yeah, look at that. These are used for targeting. We know there's going to be sellers there and there because they push the price down. So if you want to get out of your positions, when you get there, that's a great TP, isn't it? Great spot to take TP. Why? Because we know there's a load of sellers sitting there. Look at that. Accumulation, drop, defense. Yes, all these propulsion gaps, look, bang, stopped. It's just sell order execution. We don't know whether there's enough, and that's the thing you don't know. This is not, again, this isn't the Holy Grail. These will fail regularly, a lot. Yeah, they will work a lot, but they will also fail a lot. These are just showing you areas of liquidity in the market. We know there's orders here. We know there is. Why? Because you can see the orders. They're there. Look at that. It doesn't move down because I put a 0.25 short. It moves down because somebody dumped $2 million short on oil in the futures market. That's why that moved down. It's not me. It's somebody else or a load of people. And if they're short, they're going to want to stay short. Right. Okay. Quick lesson on propulsion gaps while we're at it. Your trader friend, what does he think of your trading methods? He hates it. He doesn't hate it. He does actually. He does something very similar to me, but on an intraday basis. He's a futures trader basically. He doesn't. He doesn't trade Forex at all. He only trades futures. He trades his own capital now. He's left banks. A lot of the people do. A lot of the people that work in the banks and in brokers as well, they come out and they fund themselves because they know exactly how this thing works. They know what to look for, and they're also so much more patient. If you know something, right? If you have a 80%, right, inkling that something is going to happen there, you won't do anything until you get there. And he's very much like that. And that's basic. He's disciplined. I'd call it, he's disciplined. Retail traders are not disciplined because we have an urge to get in to do stuff. Whereas somebody that knows what's going on under the hood and can see what's going on under the hood, they won't do anything until they get there, because either that is the one that's going to work or they'll just wait for another one to come along. There's no point in taking a trade unless you are, and I think the reason being is because his probability of a trade working, he's used to 100% strike rate. If you're working on a desk that has enough capital to make a 5-minute candle go down twice in a row, think about how difficult it is for you to lose, right? And if you've been trading in that way for such a long time that you're used to trades going your way, when you come out and you try and do retail, it's very hard because you don't win all the time, because you haven't got that backing of a button press that can move the market. The only way banks and institutions lose is if they happen to hit the button at the same time as another bank or institution is hitting the button twice in their direction. But they all know what each other's doing because they all know how to make money, don't they? They all know how to make money. If they see a move like that starting, they know that at some point there's going to be an exit on that position. They will be able to help that position along, if you like. When they see this guy at Barclays starting to exit his position, they will help him exit his position by pushing back. But a lot of Forex is done over the counter. It's called OTC transactions. So you don't see Forex transactions, which is why he doesn't trade Forex transactions. He needs to see volume. He only trades volume. He trades the ladder. He doesn't even trade candlesticks. He trades the ladder. So this is for us to see. You know, you don't need this. You don't need. If you took this indicator off the chart, you know, take this indicator off. Where the hell is it? Right. Where did that sell move start? You know, I know now you've seen it. Let's go to another chart. Where did the buying on that day start? Yeah, so it's really obvious, isn't it? When you know what happens. Yeah, there's a high, and there is a big candle followed by a big candle, followed by a pause, followed by a big candle, followed by another up candle. So the buying on this day started there, which caused what? A propulsion move to the upside. So we're on M15 now. If you jump up to M30, which I never use and I haven't even got on my chart, I could probably jump up to hourly there and that'll do the same thing. There we go. So there's your propulsion. Yeah. So there is your move up. There's your propulsion gap. And look what happened when price came back down into the propulsion gap. So Barclays in Asia that day said, right, order books long. We need to go long because we're going to make money if we go long. Okay, no problem. Here's a load of orders to execute. Go long. Bang, take it long. We haven't got out of our position yet. Passes over to London. London pulls back, adds to the position, takes it up into New York, hands it over to New York, who exits the position for a profit. That's what's going on in the banks because they can. You know, it's like saying to somebody, okay, you can now run the national lottery for us. What about how do I operate the machine? Oh, don't worry, you just pick the numbers. Oh, okay. Ring, ring, brother. This week you want to pick these numbers. Why wouldn't you do that if you had the power? The banks have got the power to move this. All we're seeing is their footprint. And you can use those footprints to make money if you know what they are. But you know, a blue line on a chart, as you said, what's that purple line on the chart? It's just a purple block on the chart. You need to know what it is, what it signifies, what's under the hood. Why is it there? Why is this orange block here? Because there's a break in structure. Price was moving up and it made a new high, and then it broke the range that made the new high. And in doing so, on a lower time frame, you'll find there's a propulsion gap in there somewhere. That propulsion gap on a higher time frame, that will be a propulsion gap on M15. Came back in, tested the propulsion gap, drove back down again. Yeah, they break. People try to sell, buy against them. They go, no, we're short. People try to buy. We go, no, we're short. I told you we're short. Why didn't you listen that time? We're just going to take all your money. If you come back here, I've got more money than God. You come back here, I'm just going to drive it back down again because I can. That's what they do. Propulsion gap. Yeah. So if you want to go short on EuroCAD right now, yeah, we've got a reversal alert and a propulsion move which broke that low. Right now, if this propulsion gap is going to hold, that is a pretty good place to get in. Look, propulsion gap. What's happening? Yeah, we're buying. What's happening here? The buyers have tried to go higher and they've failed. So when this candle closes bearish, if you want to use a stop loss strategy, that's a pretty good entry, isn't it? Good chance it will fail as well. Yeah, look, bang, slammed through that one, didn't we? Got up into that one. That's where they added. They didn't add there, they added there. Again, you don't know where. And again, the other thing you don't know about these, which is why they fail and why they're not the Holy Grail. When they took this short and added to their position there, where did they get out? I would say they got out there. Because why? Because of this massive 20-minute buying frenzy. If you've been selling into this loads and loads and loads and you go, right, I need to get out and make a profit, you exit your whole position fast. So that to me is probably them getting out, which means that these positions are finished and done with. We knew they were short there. Whether they are still short, I don't know. That's the thing you can't tell. Yeah, we know they're long at the moment, potentially, or someone is, because every time we've tested this area, we've bought out of it. So we know there's a load of long positions there at the moment. But again, how much is long and how much is short? Who is the winner? You can't make that decision. Nobody knows that, which is why we can only know it's going to go up and down through time. We've got no idea when it's going to move or at what level, because we have no, that's not in our power, is it? We can't do that. So if you're trying to time the market, it's just pointless. It's a pointless exercise. Euro yen. I have no idea on yens. No idea. I'm short bias on all yen pairs. I'm not trading any yen at the moment until the intervention is confirmed. Yeah, Bank of Japan made that happen. Not that one. That one. So they've intervened now. Is that the second one? That was the first one, wasn't it? That's the second one. I'm short bias because I think the yen's going to power up at some point, but I'm not willing to get into any positions on it really at the moment until I know there is some. I need to see some confirmation. At the moment, we've got this whacking great reversal alert in this range, and we're still in it. So, I don't know. On a low time frame, if you're talking low time frames, I'd be good. Yeah, good short right now. Yesterday's high. Short it from there. If that fails, you're probably going to come up to ADR. So, depends what time frame you're looking at, doesn't it? My thoughts on euro yen on the weekly time frame are different to the daily, different to the 4 hour, to the hourly. Every time frame has got fractal market structure. So, you know, my thoughts are at the moment, I'm waiting for the Bank of Japan to make its mind up as to whether or not it's going to power up the currency or not by interest rate increases. And I have no idea. So I'm neutral at the minute on that one. Neutral to bearish, I would say. I think you'll do better hitting the short button than the long for the moment. But where you hit that, obviously, is down to you. But that's not a bad spot. Asian accumulation. Again, look at the propulsion. Look at the move. We accumulated. In the Asian session, we dropped. We came back. They added to their short. London drove it down. This is the first time we've come back to that area where we accumulated and dropped from. So this is the test, isn't it? Here. So enter short, maybe have a stop above yesterday's high. Wait for a reverse alert, look, M5. Yeah, wait for a reverse alert so you know that you've got some sellers on your side. Stick a stop maybe above yesterday's high. If that reverse alert fails and they come back up and take the liquidity sitting at that high, you can either enter another short if you want to scale in, or you'll get stopped out. Don't know. Take a trade. Doesn't really matter. Hit the button. See what happens. It's either going to go up or down, isn't it? As soon as you realize you've got no control and you can't really forecast, because at the end of the day, you're not a bank, that's when you just start hitting the button willy-nilly and taking the profits you get. That's really what it is. As simple as that. Simples. As the meerkat would say, if only it was. But yeah, I don't know. I mean, look at it on an hourly at the moment. We're ever so slightly going up, aren't we, in some weird expanding channel. So the chances of you getting to 150 ADR today, I'd say, are pretty slim. And we've had 2 days solid of yen strength. So I suspect this is probably a profit take on that move. And around about a 50% retracement on fib if you like your fibs. I don't know with any yens. Indices is just starting to push up again. So again, accumulation, drop, propulsion gap. So this is where, if you want to get on the short train today, that's a really good spot. If they're going to defend that area, there's a bit Christmas tree down here. Not very nice. Going to defend that area. That's where you'd be good to add a short. Assuming they are going down today. Obviously, we've had many days on the DAX where it looked like we were going to drop, and we just went. So certainly we've got a long way to go. Look, ADR is all the way down there. Look, we've got such a long potential, such a long drop ahead. And obviously we've got, these are the lows that we need to break if we are going to start the next bear leg. So there's a hell of a long way to go. If the bear leg down on the indices is going to start, we've got a long way to go. So this is the Nasdaq, not the DAX, but they're all the same, really much. Right, I'll leave it there, guys. I'll be back on Monday, 7:50, usual time. If you need anything, I'll be in the Telegram group. Black Friday sale ends today. If you did want any indicators or the EAs or whatever, they're there, cheap at the minute. But yeah, back on Monday, and I'll be working on the EA again today, see if I can figure out why the hell it's got wrong this morning. So that's my job for the day. Bug fixing code. Ooh, fun. I'll get there. Right, have a good one. Anything you need, come in the Telegram group. Good luck today. Hopefully we have a good New York. And I will see you guys on Monday.